Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, a volatile day. We started on a wobbly note, but we did manage to end the day near the day's high. In fact, the Nifty, very close to that 22,200 mark. 22,198 is where we shut shop. And most of the sectors, barring the PSU banking pack and the oil and gas pack, have managed to end the day in the green. So if you see the likes of autos, realty, metals, IT, these were among the top gainers. Remember, IT stocks came under pressure yesterday. Today they have snapped out of the losing streak and managed to end the day being among the top sectoral gainers of the day. If you look at the individual movers today, you had the likes of Tata Motors and TCS. These stocks were up anywhere between 2 to 3% apiece. In fact, Tata Motors also managed to hit a fresh 52-week high today. IndusInd Bank, I beg your pardon, Power Grid, Bharti, Airtel, Sun Pharma and Cipla were among the top gainers. On the flip side, some of the two-wheeler stocks, Hero Moto emerged as the top Nifty loser. Aside of that, SBI continues to see some bit of profit booking. Yesterday as well, SBI was among the top losers, and today as well, that trend continues. Bajaj Finance, stuck in a downtrend, among the top Nifty losers today. UPL as well, and Bajaj Finserv also in the red. Aside of that, if you look at some of the other stocks that weren't doing all that well today, you had the likes of Adani group of stocks. Those came under some bit of profit booking today, given the fact that yesterday they saw a good bit of buying interest. Axis Bank, SBI Life, BPCL, Asian Paints continues to languish. Coal India, these are some of the other losers in today's session. If you look at the broader end of the markets, the breadth was tilted in favor of losers today. So advanced decline ratio on the NSE was almost at 1:2, and the mid-cap index was clearly underperforming today. That index ended the day in the red, marginally so, but the Nifty small cap index managed to end the day in the green. Among the movers and shakers on the Nifty 500 index, we had the likes of BEML, Jamna Auto, Intellect Design. Intellect Design also hit a fresh 52-week high today. BSC as well saw a good bit of buying interest today. On the flip side, Vodafone Idea, ahead of the outcome of the board meet on fundraising, that stock was among the top Nifty 500 losers, down 5% or thereabouts. FDC, Sham Finance, sudden fall coming in on that counter, 7% down. In late trade. We'll be talking about that with our technical expert as well. Varun Beverages and Adani Energy, these are some of the other losers on the Nifty 500 index. Among stocks at 52-week highs, Intellect Design, as I mentioned, RITES, Bharat Dynamics, BEL, HDFC, AMC, these are some of the stocks that managed to hit a fresh 52-week high in today's session. On that note, let me also bring on board my guest for today. Joining me is Nilesh Jain of Centrum Broking. Nilesh, great to have you on the show, taking out time and joining in this afternoon. Looking at the market setup, we've been fairly range bound and, we've been consolidating at highs. Today as well, we started on a wobbly note, but, towards the end of the session, we saw a good spurt coming in fact, very close to that 22,200 mark. So what is the base you are working with right now on the index? And on the higher side, do you think 22,300 looks possible, ahead of the Feb FNO expiry?
Very good afternoon to you, Nandita. Absolutely. So today we have seen a good spurt and a good close. I would say towards the closing hour, we have seen a good recovery as well. Now looking at this monthly FNO expiry this week, we expect volatility to remain high. The India Week's volatility index is still at elevated level of 15.76. So what we expect is that the Nifty may test the levels of 22,300 on the upside. At the same time, on the lower side, 22,150, 22,100, that might get tested as well. So there is a clear range for the Nifty, 22,000 on the lower side acting as a major support zone. We don't expect Nifty to expire below 22,000. At the same point of time, we are not expecting Nifty to go beyond 22,500 as well. So that's precisely 500-point trading range. Looking at the derivative data, so that's the 500-point trading range. We believe that Nifty is likely to oscillate in this range. And if we just narrow it down, so we expect Nifty to expire somewhere in between 22,200 to 22,300.
All right, 22,200 to 22,300 is the range to watch out for as we head into expiry. But the Nifty Bank Index, staged a very good recovery from the day's low. We in fact managed to end in the green. But do you see more legs to this, recovery, given the fact that we've seen Nifty Bank trying to recover, trying to get back on its feet, but every time that happens, that seems to be short-lived. Here today we saw a good recovery. Do you think that that can extend into tomorrow as well?
Absolutely. So today we have seen some amount of underperformance from the Bank Nifty. But looking at the today's close in the Bank Nifty, it has found support near about 46,300 in the spot levels. So closing wise, it can be considered as a good closing. We expect Bank Nifty to move towards 47,000 on immediate basis. So yes, pullback is very much likely. A lot of short buildup can be seen in the banking space. So there could be possibility of a short covering move ahead of the monthly expiry for the Bank Nifty as well. We expect Bank Nifty to test 47,000. And if at all it reaches the same on the upside, then the next leg on the upside will open up for 47,300 to 47,500.
Right, 47,500. That's the level on the upside to watch out for on the Nifty Bank Index. But let's talk about specific stocks. And Nilesh, TCS. Among the top Nifty gainers today, of course, there's an upgrade that has come in from UBS, wherein they have raised the target price to 4,700 rupees per share. Of course, they believe that TCS will take the lead when it comes to margin recovery and margin performance, revenue growth as well vis-a-vis other peers like Infosys and HCL Tech. But IT stocks saw some bit of profit booking right in last couple of weeks. Do you see some bit of reversal in the trend now? In the sense that in the last couple of weeks you've seen profit booking kick in. But now, do you think that is largely done and perhaps the up move will be on the upside here on?
Absolutely, Nandita. So we have seen good up move in Nifty mid-cap and small-cap IT space. But now looking at the reversal in the TCS, I feel that there could be possibility of a follow-up buying in this particular counter. And upside is still open for 4,200 to 4,300 on immediate basis. So at today's closing, I think it's a good level to make a fresh entry on the upside. As I mentioned, it is likely to scale to a fresh record high and move beyond 4,300 going forward.
All right, that's the view on TCS. But let's talk about Vodafone Idea as well as Indus Towers, right? Both the stocks have seen a very good run up. Today, of course, we saw some bit of profit taking in both the counters. Of course, we are awaiting the news on the fundraise front as well. But after the kind of run that we've seen, do you think the correction that we saw today is a good buying opportunity in these stocks?
So yes, given the kind of run up that we saw in these two stocks, I think today's fall is giving a good opportunity. If at all we see any further downtrend from here, then that could be used as a buying opportunity. So as far as idea is concerned, it has a good support near about 15 levels. So that should be the stop loss for the long position. We can expect another pullback to continue towards 18 and 18.5. At the same time, Indus Tower, if you look at this particular counter, after a sharp run up in last 3 consecutive sessions, today we have seen a round of a profit booking in this particular counter. So the support for this particular as far as Indus Tower is concerned, is placed at 230. So that should be the stop loss for the long position. We can expect another leg on the upside towards 250 to 255.
All right, those are the levels to watch out for there. But let's talk about a Sham Finance. A very sharp downtick coming in today, 6 to 7% kind of a downtick. And, it is one of the contenders, according to Nuvama, to make an entry into the Nifty 50 index. And UPL, of course, could see an exit from this index, right, from the benchmark index. But, if you look at the movement in the stock today, I mean, do you see any kind of breakdown on charts, or do you think it's a one-off move? How is it poised?
So Sham Finance had been in an uptrend since a long time post breakout that we saw last year. Now today's fall, I think it's merely one-off, and it is on the back of profit booking as well. It has not breached its crucial support of 20 to 40. So that is still acting as a major support zone. As long as it trades about 2250, 2240 levels, the structure continues to remain on a positive side. And any dip can be used as a buying opportunity. On the upside, the another leg on the upside can be seen towards 2500 to 2550.
And what about UPL? Because I keep getting on queries from our viewers wherein they ask me whether it's a good time to buy into it. Because of course the stock has consistently been making 52-week lows, and there are intermittent days when it sees some kind of a rebound, but it doesn't really have the legs to sustain. That's been the trend. So here on, do you think UPL actually presents a good buying opportunity at these levels, or do you think since it could exit the benchmark index, it's better to kind of stay away from it?
See, UPL has been one of the underperformer. Whatever pullback we saw in the past has been used as a selling opportunity. So pullbacks are getting sold into. I think it is better to stay away for the time being from this particular counter. Any pullback towards 510, 520 could be a good opportunity, good shorting opportunity, I would say. I don't see any base formation yet on the chart, so there could be possibility of another leg on the downside, which will open downside towards 460 to 455. So as of now, it is better to stay away for the time being till the time we see any reversal on the chart. The structure is still looking weak.
All right, structure looking weak when it comes to a UPL, but what about a Whirlpool India? I mean, there's news flow around this counter. There was a block deal recently. In fact, promoters have, said that they have cut stake on the back of, in fact, due to higher valuations. And shares, of course, hit a fresh 52-week low today as well. It has earned a downgrade from Jefferies. Target price has been cut to 1125. So, what are the kind of levels you'll be watching out for on the downside as support level for this particular counter?
I think today it has tested a crucial support zone. If you look at the weekly time frame as well as on the monthly time frame chart, in the year 2018, the stock formed multiple base formation near about 1200 to 1250 zone. And today as well, if you look at, it has made a low of roughly around 1186. So if at all it needs to sustain and witness a pullback, and that the level that should be watch out for would be 1180 to 1200. So that should be the stop loss for the long position. We might see a pullback from the current level, and a pullback may extend further towards 1350 to 1400. But still, we are not recommending any buy from the current level. Those who are already holding the long position can keep a strict stop loss on the closing basis below 1200. The structure is not promising. It looks more sort of a sideways, and the bias is slightly on a negative side. So better to stay away from taking any contraband at current level.
All right, Whirlpool, that's the view there. But what about an ICICI Lombard? Nilesh, good up move, and over the last 1 month, we've seen a 16% uptick. Today, we've got news flow that ICICI Bank has acquired somewhere around 1.5% stake via block deals, of course, according to sources, and Bharti Enterprises is a likely seller. But the stock has been in an uptrend. Would you, call it a breakout stock and perhaps look for higher targets here?
So absolutely, Nandita, it's a breakout candidate. The breakout came at 1650 level, and currently it is at 1700 plus. So yes, certainly a breakout candidate. The counter is constantly forming a high top and high bottom formation on the weekly time frame chart as well. But it is not advisable to chase post, after a spurt that we saw yesterday of close to 5%. Clearly, it has given a good flag and pull sort of pattern breakout, but rather wait for some dip towards 1650 to 1700 zone for fresh entry. And if somebody is already holding the long position, can continue to stay put, keeping target price of 1800 plus on immediate basis. And position target for this particular counter comes around 2000 plus.
That's the view, 2000, kind of levels to watch out for there. CMS Info, that's another stock that saw a block deal today, 27% stake, changed hands. But, last year the stock did fairly well, 35% kind of an uptick. But, so far this year, it has largely been range bound. Here on, do you think it could see an uptick going forward? How are the charts poised here?
A chart on immediate basis looks still furthermore consolidation, and we expect it to test the levels of 410 on the upside. At the same time, 360 on the lower side is constantly acting as a crucial support zone. So that's precisely 50-point trading range for CMS Info. But looking at the overall structure, there are no recommendations from our side for this particular counter for the time being, till the time we see any decisive breakout above 410. If somebody is already holding the long position, can keep a strict stop loss below 360 and stay put for a pullback to continue towards 400 and 410.
Okay, Havells is another stock that has hit a fresh 52-week high today. It's got an upgrade from Goldman Sachs to buy from neutral, and the target price has been raised to 1660 vis-a-vis 1540 earlier. This is the highest price target for Havells on this street. Stock has been doing well, 12 to 13% kind of an up move over the last 1 month or thereabouts. Here as well, do you or would you advise someone to chase momentum, or should one book slight, partial profits here?
So Nandita, it's a breakout candidate, or I would say a multi-year breakout can be seen on the chart as well. So since 2021, in the month of October, so this particular counter made a high of near about 1480 plus. So I think looking at the recent momentum, it looks like the stock is likely to break those levels on the closing basis and inch towards 1550 to 1600. So these are the two potential target in the near term. So it can be bought on declines, or rather I would say buy in a staggered manner, keep a stop loss below 1400. The stock still has a potential to test 1550 to 1600 in the short run.
So Cello World is another stock in focus. Motilal Oswal has come out with a buy, rating, target price at 1100 per share. Still some way to go. 878 is where it's at the current juncture. But do you expect a 4-digit figure on the screen sometime soon for this particular stock?
Absolutely, quite possible. So overall, this space has been buzzing in last couple of weeks now. So Cello, looking at today's gap up opening, I think it's a breakaway gap, and the upside may extend further towards 900 to 920 on immediate basis. If somebody is looking for a position target, then definitely 4-figure mark is very much likely in next 4 to 6 months time frame. And at current level, the support for this particular counter comes somewhere around 800. So 800 should be the stop loss. If at all we see any decline on the back of profit taking, then that should be used as a buying opportunity.
Buy on declines should be the strategy when it comes to a Cello World. But two more stocks I want to bring your attention to before I come to your recommendations if you have any. Tata Motors, once again hit a fresh 52-week high. We are waiting for this stock to hit a 4-figure as well, right? Here on, this has been a breakout stock when it comes to the auto universe. Would you say that this is the top pick from this particular sector?
So Nandita, this was the top pick from my side as well. So that's a coincidence. So I was about to recommend this particular counter. It's a good breakout candidate today. We have seen a double top pattern has been taken off, and on the upside, as you have rightly mentioned, it is likely to inch towards 1000 sort of mark. That's a magical 4-figure that we are likely to witness in the very near term. And the next potential for this particular counter on the upside is 1050 to 1100. So structure is looking very strong. And after a spurt of close to 3% today, I would rather wait for dip towards 950 to 940 and buy the stock, keeping price target of 1000 plus in the very near term, and keep a stop loss somewhere near to today's low of 930. So that should be the stop loss from trading point of view. But it has a potential to move towards the 1050 as well. So apart from that, Tata Motors DVR is another counter. So similar pattern and exactly similar breakout can be seen here as well. So 660, 680, these are the two immediate target for this particular counter. Stop loss can be placed below 615. So if somebody is looking for an alternative to play Tata Motors, then Tata Motors DVR can be bought.
All right, that's the view then on Tata Motors and Tata Motors DVR. But SBI, this is the last stock on my list today. Of course, we saw the elephant starting to dance, of course, when it comes to PSU banks. 1 month, we've seen a 20% kind of returns, but off late has been cooling off a bit. So do you think this cool off is a good opportunity to buy? Because, last year I remember we were talking about how SBI is not starting to pick up pace, but then it did pick up quite a bit and now some bit of cool off. But here on, more upside on the charts, and is this a good buying opportunity?
Absolutely, Nanta. So this has been the history for this kind of stocks where we have seen good spurt in the very quick time frame, and post then we usually see sort of a retracement, and that is what is happening in this particular counter as well. So we expect some more retracement, and the stock may test the levels of 735, 730. And if that happens, then definitely that will be an attractive buy. If somebody is looking to make a fresh entry, the upside target potential for this particular counter is very much intact of 800 on immediate basis, and position target for from next 3 to 4 months perspective comes around 850. But not advisable to chase this particular counter at 750, 770. Better wait for further dip towards 735 to 730. If at all it comes, then that could be an attractive buy.
All right, look at buying SBI at slightly lower levels of 730, 735 or thereabouts. But you mentioned Tata Motors being one of your stock picks, but going into expiry, anything else that's looking interesting on the charts?
Right. So another stock that we are liking is from Tata Group. That's Tata Communication. So this particular counter has also given a good breakout, and today as well we have seen a follow-up move in this particular counter. So structure-wise looks very strong, and the upside is open for 2000 plus sort of target. Currently it is at 1910. So stop loss will be placed below 1870, and the target on the upside is intact of 2000. The slightly position target, but looking at the overall structure, it looks like it has a potential to test those levels in the March series. So that's one counter, and apart from the Tata Motor, we have already discussed.
All right, two Tata Group stocks, came as recommendations from Nilesh. With that, Nilesh, thanks a lot for taking out time and joining in this afternoon and sharing your thoughts with us. Well, okay. Well, with that, we've come to the end of this edition of Closing Bell. Of course, we had a good close today after a wobbly start, as I mentioned. But let's see whether or not we, carry the momentum going into tomorrow, which is the penultimate day of the FNO expiry for the Feb series. But completely timed out here. Thanks a lot for joining in. And stay tuned to Moneycontrol for all your other news and updates.